So I have gotten asked a lot about these videos discussing needing 100 shares of Palantir or needing 100 shares of a lot of other stocks. So I figured I would break them down using Palantir as an example, give you the hard truth about this type of investing, the good and the bad and everything else so you can make the best decision possible for your investing. Just make sure you like the video if you like getting the truth without the hype. So let's start with the flaws in each one of these videos that I saw. And then we'll jump over to the good stuff as well, because there is some awesome things in there too. And of course, I'll give you guys the hard truth about it all. And it's not what you're thinking at all. It's something completely different. The first flaw that I saw on every one of these videos is projections. The projections that folks made in these videos to kind of explain the point of needing to own 100 shares of Palantir, for example, were just bad, guys. I'm not going to call out names here. Not every one of them was terrible, but for the vast majority of them, they were bad. Just because revenue is expected to grow 20% per year does not mean the stock price is going to grow 20% as well. Who cares if they grow revenue if the margins go down and therefore EPS goes down instead? That revenue growth won't mean anything because the stock price is going to move in the exact opposite direction of the revenue growth most likely. And vice versa. If the revenue can grow 20%, but if they somehow find a way to unlock and really increase margins or increase profitability even further, that right there is going to accelerate the stock price growth in general, and you may see returns a lot better than that 20%. And that's just one example. There were several other things where they just used random numbers to extrapolate out projections for the stock, and that's not the best way to do it at all. It's about earnings and valuation more importantly. It is not about revenue growth exclusively, but that's kind of what they did, and it was kind of one of the flaws in the videos right there. Which leads us perfectly into number two, which is it neglected any notion of valuation or due diligence. Look, you know we preach on this channel, you need to learn to do valuations and you need to learn to do due diligence. Now, I understand some of them are, basically we're implying that you've already done your due diligence. But for me, when I see these type videos where they're very specific and they're telling folks to own a specific stock for a very specific reason, you need to kind of caveat that at least once with, hey, make sure you've done your due diligence. Make sure it fits your plan. Make sure it's the right stock for you. In general, if you're looking, if you're 65 and you're retired and you're looking for basically income, passive income, Palantir is not the right investment for you. If you can't handle volatility, Palantir probably isn't the right investment for you, and your due diligence will tell you all that sort of stuff as you do it. So that was the first piece that I felt was really missing, and that you could have mentioned it for 20 seconds. That would have been okay too. I wouldn't have dinged it, but not a single one of them mentioned anything about due diligence or valuation, which is incredibly important when you're using this 100 share concept that they basically described. Because I can tell you right now, owning 100 shares of Palantir at $40 per share is completely different than owning 100 shares of Palantir at $6 per share. Valuation matters so much in the end, and it wasn't even discussed in any of the videos there. So I want to mention it right here, and it's a big flaw. You have to do valuation so you don't buy your 100 shares at $40 per share, but instead you're loading the boat whenever you're at a much more reasonable valuation for Palantir. So that way the shares that you do own are at a proper valuation to where you can see the appreciation that you want to see in the stock long term. And I am almost out of $15 spots for my group, and the sale for the main group where you learn how to do exactly how to do a valuation and due diligence on a stock is going to expire this Sunday. So make sure you grab your membership there, grab that pricing that's on sale right now before the price expires, or before all the shares fill up for the $15 tier. You get access to that $250 challenge. You get access to 5 free courses, coaching, see all my buy and sell alerts in real time, see my complete watch list with price targets. So much, guys. Just check out the pinned comment down there and see if a membership's right for you. So number 3, it unintentionally encourages lottery investing. Now, let me kind of define lottery investing for you, just kind of in simple terms here. There's not a technical definition for it or anything like that. But when I think of lottery investing, and I see it a lot, it's where basically you expect to buy a lot of shares. Let's just say $1,000 of Palantir per se, and you're just hoping for 1,000x in the future to where it'll turn your $1,000 into $1 million into the future. That's lottery investing in a nutshell. I'm just going to put $1,000 in, and it's just going to turn into $1 million into the future, or $10 million into the future, or whatever the case is. That's where all these crazy projections and people projecting out the 2050 and stuff like that come from in order to show how and it might very well be true, but it's not how investing actually works. Investing works on the basis of investing consistently over the long run. And yeah, sure, if you invest consistently over the long run in a variety of different stocks, you might very well hit that stock that, starts at 1,000 and turns into $1 million later on. But it's not probable is kind of the bigger point. And I don't know I know lots of investment millionaires, guys who have invested in the stock market and have made millions of dollars doing it. And not a single one did it that way. Now, sure, they may have had a stock that turned into a 10,000% return, 50,000% return, whatever the case is over the course of multiple decades, not in a very small time frame, but over the course of multiple decades, they've had stocks that done that. But actually making millions of dollars investing in the stock market have invested consistently during both bull and bear runs, year in and year out, good market, bad market, for decades. That is how they have made millions of dollars in the stock market, not with this lottery type of investing. This is why a simple DCA crushes every other strategy out there. Not taking profits or trading or anything else like that. Statistically speaking, just a straight DCA consistently over time is how you get there. Not buying 100 shares of a stock and then kicking your feet up on the beach and watching it turn into millions. All right, now I'm not bagging on those videos there and the flaws in the videos. Let's get to the awesome part there, because I did think there were some really good things that came out of these videos as well. And then we'll get to the hard truth in regards to Palantir stock. So the first awesome part is they illustrate the power of compounding. They showed right there with the actual calculators that they use that you don't need to trade in and out of positions and time the tops and the bottoms and take profits and all this other stuff like that. It illustrated beautifully the power of compounding. And obviously we'll talk here a little bit about compounding and how to accelerate the compounding. But in general, it showed off the beauty of just letting compounding do the work for you. And talk to anybody who is rich, and I'm not talking just stock market rich, like real estate, building out businesses, whatever the case is. The facts are they don't do it all themselves. They have other folks doing the work for them and helping them along the way. So when I think about compounding, I think about compounding as essentially my own personal worker that works for me and my portfolio, who goes to work in the background and just does the work for me into the future. I don't have to do a thing except for just listening to earnings calls, make sure there's no fundamental changes in the business or, something crazy is going on with a particular company there. That's all I got to do. But I don't need to do anything in regards to the, mechanics of, getting in and out or anything else like that. I let compounding take care of everything else for me, and statistically, it beats every other strategy out there. So it beautifully illustrates the power of compounding and how compounding is essentially another worker working for you in your portfolio. And the second awesome part is goal setting. Although I don't like the premise of the video in general, what I love about it is it gives you a tangible goal to follow. And most folks don't have goals whenever they invest in stocks. They just invest in stocks. They don't have a goal. They don't have a specific number they want to get to. Everybody wants to get rich. Everybody wants to invest. I want to own great companies, but they have nothing tangible there in terms of goal to reach towards in order to kind of get there and see where do you want to be actually written down, a goal that you can get there. So whenever you say, hey, own 100 shares of this stock, that's a tangible goal that you can reach to and then work from there to your next goal. Unfortunately, most people invest without goals, and that's one of the biggest problems that I see, especially working with group members and just folks that I run across in real life and sometimes at our live events with our group members and such, is folks think they have goals until you actually discuss the goals and I make a couple of challenge questions and it quickly unravels and people quickly realize, oh, I thought I had a goal, but I really don't have a goal. So let's kind of run through a quick example here using Palantir and this particular strategy that they're being discussed in these 100 share videos. So if you take Palantir and you buy your 100 shares at today's price, you can extrapolate out over, 10 years, we'll say, and give it a reasonable growth rate and see, does that get to your goals or not? Now, for me, I like to be conservative. So I would have put a growth rate on Palantir like 12% because I do believe it's going to beat the market. And hey, I want to be conservative with my estimates because I want to ensure that I'm giving myself the highest probability possible to hit my goals. Now it's possible instead of 12, it returns 20. It's possible that it goes on an Apple style run and it returns thousands of percent over the course of that 10 years, just like Nvidia has returned thousands of percent in the past 5 years. It is possible, but I'm not going to bake that into my numbers whenever I'm trying to figure out how many shares of Palantir I want. I'm going to use a very conservative growth number, 12%. Hey, you want to use 15%? That's fine. You can even use 20% as well, but I try to be conservative because I would much rather own too many shares and have it return incredibly for me, which just means I make even more money, as opposed to being disappointed that it beats the market, but it didn't give me that 20% return, 25% return, whatever crazy number some folks are plugging into their spreadsheets and everything else. I want to be conservative so that way I know that I have the right number of shares to where even if it just beats the market and doesn't really, turn into the next Apple, the next Nvidia, or the next great stock out there that returns thousands of percent, I'm still going to hit my mark and my goals with these stocks. And this at least brought to light the idea of having a goal of number of shares to own at the 100 share mark there. So that right there was one of the best things that I got from this, because it's a lot of people's first introduction to having a number of shares that you should strive for to have in order to put it in your portfolio. But this also leads me perfectly into the hard truth. And the hard truth about all this is share count is relative. Now, let me kind of explain this a little bit further, because I know share count is a relative term that probably just doesn't make a whole lot of sense here. So let me just piece it all together here piece by piece. Now, I get asked all the time, what is a full position in a stock? Is it 100 shares? Is it $10,000 in a stock? What is it? What exactly constitutes a full position? And my answer back is, it is the amount of money, for me, this is my answer to what a full position is. It is the amount of money I am willing to risk on a particular stock, having it meet my risk profile to where basically I can sleep very comfortable at night knowing that I have the right number of shares there and the right amount of dollar amount invested into the company. More importantly, that I'm comfortable if it goes to zero, not that I would be happy, but I'm comfortable with the risk that I have there with the stock, with the amount of money I have at risk. So let me kind of give you guys further examples here to kind of illustrate the point. We have members in my group who a $10,000 Palantir position is a big position. That's a big position for them. That's a lot of money into that stock. That is just a large position. And then we have other members where they'll do a $100,000 DCA every month into Palantir. Again, a full position at $10,000 worth of shares, and another member who's spending $100,000 a month into Palantir. We have folks in the group who have 50% or more of their portfolio in Palantir, and then we have other folks who have less than 5% of their portfolio into Palantir, because basically one has a very, very high conviction in Palantir, and the other person either views Palantir as a bit riskier than they like, or they have higher conviction and feel there is less risk in a different play that they would rather put their money into instead. So the bottom line is, there is no right or wrong answer to this question. There is no percentage that the stock should be in. Like one rule, everybody should have 20% of their portfolio in Palantir, 10%. That doesn't exist. It's not true. Same exact thing. Some people should own $10,000 worth of Palantir. Other folks should own $2 million worth of Palantirs just based upon their income, the size of their portfolio, a lot of other factors like that. There is no one size fits all formula, rule, or anything else that you have in regards to your particular portfolio and what you should have, because I can't judge. Everybody has a different conviction in Palantir. Everybody has a different risk aversion when their stocks go up or down. Everybody has a different feeling about where Palantir's future lies. Yeah, some of us line up in very similar areas, but I'm bullish on the stock. And there's a lot of other folks here, right here on YouTube, that are just as bullish as I am, but they have far higher price expectations than I do. And I don't expect that sort of price in Palantir in the future. Does that make me right and them wrong, or them wrong and me right? Absolutely not. It's just based upon our own experiences, our own risk tolerance, our own incomes. Everything else comes in to actually create that factor set that basically determines the right share count for you, because share count is relative to your situation. That is why you can't take my word for what the right share count is, or the right amount of money to put into Palantir, or anybody else out there, because none of us can speak to your situation. And you're doing yourself a disservice by doing that. You've got to figure that out on your own, or else you will fail as an investor in the long run. We have seen it repeatedly over these past 4 years with the stock market going basically bonkers, and we will see it again in the future. These patterns are not new. They've repeated themselves for years and years and years. So you got to do the work to figure out what the right share count is for you in the end. And again, if you don't know how to do that level of work, you have to learn it. Search it right here on YouTube. Join my group. It's on sale right now. Make sure you get your spots where we go through all of that. You can get the 5 courses. You can see all my buy and sell alerts in real time. See my watch list complete with price targets. You can get that free coaching to help you out with this. Be a part of the best 6, 7, and 8-figure Discord out there of all those members helping you as well. Get better as an investor and determine what the right situation is for you, what your risk tolerance is, help you do your due diligence so that way you understand Palantir on a much deeper level. Do that valuation so you understand when you're overpaying and underpaying and everything else. Just check out the pinned comment, guys. That sale is going to end next week. And those founder spots are actually going to clear up a lot earlier than that. That one's going to go away. So make sure you check out the pinned comment. Get your membership before all that expires and the price goes back up. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.